Hey everyone, Rob B here with Rob D, and it is the final market update of the year. But we've got news reports that you must listen to because we have now a trend on house prices that is worth paying attention to. But with some mixed data, some gloomy predictions, and some staggering numbers in from Scotland.
Welcome to the Property Podcast. Thank you for joining us. This is the show where we share some of the knowledge that we gain from operating full-time in property, putting together hundreds of transactions every year. And in this episode in particular, help you get beneath the headlines and find out what's really going on out there. So make sure you stick around and do stay all the way to the end, because in Hub Extra, we're going to be giving you a helpful tool if you've got goals around your health for next year.
Before we get into all the action of this month's news, let's bring you a big piece of action from Property Hub, because prices are going up on the magazine. But don't worry, if you've been long wanting to get yourself a subscription, you've got time to lock in the low price that we currently deliver the magazine for yet another year. In fact, we've not put the prices up for many years. I can't remember the last time putting it up. In fact, I don't know if we've ever put the price of the magazine up. So it will continue to be an incredible deal next year when we do. But if you want to lock in the magazine for just £5 delivered every other month, and that includes delivery, it's an incredible resource, super high quality. I can say that because Rob and I do very little towards it. It's our wonderful team that put this together. It's absolutely fantastic. Then head over to propertyhub.net/magazine. Do that quickly. Lock that price in and you will get the best property deal of this year.
Oh, I'm feeling a bit emotional. It's our last market update of the year. Let's see what's going on in December. Plenty happening in the world of politics, and we'll come to that. But let's start, Rob, as we always do, with house prices, where there are plenty of indicators that the market is not in the strongest of health, and we'll come to some of those. But prices are resolutely refusing to crash. Nationwide, reporting prices up again.
The key word, Rob, is again, because last month we reported that property prices in October rose by 0.9%, so almost 1% of growth in October. And at the time we commented to say, well, if it's just a month in isolation, a blip if you like, then read not too much into it, and let's wait for next month's data. November's data has arrived, and Nationwide is reporting that house prices are up by a further 0.2%. Now, 0.2% is nothing to write home about, but the fact we've now had 2 months of price growth is very, very interesting. And I wouldn't say it's quite a trend upwards yet, but it's certainly going against the grain of what people would probably expect the market to be saying right now, Rob. It's interesting to see that we've had 2 months of growth. And yes, there's probably reasons for it. There always are reasons behind prices going up and down. But if you said to me 2 months ago, you're going to see 2 months of positive growth in property house prices, I probably would have chuckled. Don't know about you, but I just didn't see this coming.
No, it is a surprise. And what bearing will this have on our predictions that we made back in January? Where will we end up? Well, you can find out next week when we're going to be revisiting those. But when you look at some of the other stories that are around, it becomes even more surprising that Nationwide is showing prices as being up. And if you look at Rightmove data, maybe we'll see a little move downwards in December or January, because Nationwide, remember, is looking at the point of mortgages being agreed. Rightmove puts out data about asking prices on its platform, so it's a bit earlier in the process, and that is still showing asking prices falling. Asking prices, in fact, fell by 1.7% last month, according to Rightmove, which is the biggest monthly drop since 2018. And it's got an interesting breakdown showing that smaller properties are holding up better than larger ones, which is kind of as you'd expect, given that affordability is constrained for everyone. And Zoopla also, Rob, has reported that discounts to asking prices have reached their highest level in 5 years. So the average buyer is securing a discount of 5.5% off the asking price. And they're calling this the best market for buyers in years. So it doesn't quite make sense on the face of it, does it? You've got asking prices falling. You've got record discounts being secured from asking prices, yet property prices are slightly up. It's all very strange.
It is very strange. And as we move into the Christmas periods, you've got that seasonality to take into consideration as well. So I think we should all sit tight and let's see what the data brings us at the beginning of next year. the first few months of next year. It's going to be really, really interesting. I'll tell you what else it's going to be, Rob. Really, really hard to make predictions for property prices next year. I'd like to say, should we give it a miss, but we're not going to. And as you've already said, we're going to be reviewing what we predicted this year next week. That's definitely going to be one to listen to. That might bring you some Christmas cheer. Now, fortunately, we're not the only brave souls to make predictions, or you could interchange brave with stupid if you like, but the OBR has also been making their forecasts for UK property prices, and they predict that from peak to trough, property prices in the UK will fall by 7.6%, and the majority of those falls actually happening in 2024, with them hitting their lowest point in the final quarter of 2024. So that's an interesting read on the property market. That's quite negative, and I'm quite surprised by that, because while I don't think anyone's going to be predicting double-digit growth for property prices next year, I think that we'll start 2024 in a slightly stronger position than we started this year. So that's quite a negative read on the market for next year. Now, as we've said, Rob and I will be making our predictions, but also at the beginning of January, we'll be bringing you predictions from a range of property experts as well. So it's not just ourselves who are putting our heads on the chopping block. So there's loads of exciting things coming up on the podcast. We've got a few great episodes to wrap up the year, and then starting strong in January, we've got experts making their predictions, and Rob and I will be making ours as well. Will any of us be as negative as the OBR? We'll see.
I like how you've separated us from experts there. Very sensible. Let's move on to talking about mortgages, because this, of course, is another big factor in working out where the market is going to go next. And the good news on mortgages is that mortgage approvals have risen for the first time in 3 months. So demand for mortgages and mortgages being granted is on the increase again. And there's also a stat that buyer demand is on the rise, still lower than it was in 2019, but higher than it has been. And the effective rate on those new mortgages that are being drawn, the mortgages that have been agreed in the last month, is 5.25%, which is, of course, astonishingly high compared to where we were a couple of years ago. And that compares to an overall blended rate across all the outstanding stock of mortgages of 3.2%. So you could look at this in two different ways. You could say, well, new mortgages being taken out at 5, the stock as a whole is at 3, therefore there's a whole lot more pain to come as those existing mortgages get refinanced at higher rates. But you could also say, well, if the market is this relatively stable at 5 and then we see rates fall next year, which is far from a certainty but is a possibility, then there's a potential for the market to push on from there as affordability improves. So again, the future, very hard to read, but mortgage demand on the up and rates still very gradually drifting down week on week. Nothing dramatic, but mortgages are still getting cheaper. If you know anything about our service, Property Hub Invest, it's probably that we secure you exclusive property deals at a discount. But I now make all my investments through Property Hub Invest. And what I value most is actually the time saving and having the care team on hand to deal with developers, mortgage brokers, solicitors, all the things that normally cause so much stress and take up so much headspace. Property investment will never be effortless, but having the expert team at Property Hub Invest makes it so much easier. If you're interested in finding out more about Property Hub Invest, just go to propertyhub.net/invest.
It's now time for a regular update on the rent cap in Scotland. Yes, the rent cap to lock in prices at affordable level for tenants continues to deliver booming rents. So in this report from Property 118, it reads that rents have risen by 14.3% in the year up to the end of September. What's interesting in this report, though, is not just another story reporting how the rental cap is dramatically failing renters and landlords in Scotland, is the breakdown of the type of properties and the rental growth in those individual property types. So while the overall average number is interesting and actually quite staggering as a statistic in its own right, when you look at the areas which this article gives you, it becomes really interesting. Now, Greater Glasgow is where rents have risen the most, and that's up by a whopping 22.3% over the last 12 months. Absolutely huge. But the lowest is in Dumfries and Galloway, which is quite a rural area. And the growth there, well, 1.5%. It's less than inflation, much less than inflation. So a real mixed tale here, Rob. And something that we talk about a lot on the podcast is investing in cities or commuter areas to cities. And it's for good reason, because that's where the strongest rental demand is. I know it's like common sense stuff, But sometimes people go in the face of common sense and try and beat the system in a different way. But this just screams to you that do the simple things, do the obvious things, and you will do well if you're looking for strong rental demand and strong rental inflation, which ultimately is what landlords want. Tenants might want it, and I'm not saying this is a good thing, but if you are going to invest, why would you choose areas that deliver really low rental growth less than inflation, when you can get areas that are currently quadrupling levels of inflation when it comes to rental growth?
Yeah, I don't think you'll ever see a better example, a clearer example of 2 points that we make again and again on this podcast. One being that an average is just an average and you never buy the average. So here you've got an average of 14%, but a spread of 1.5 to 22, which is enormous. So it kind of makes the average a bit meaningless. And also the fact that you've got to buy where the demand is. And while you might expect that to be the direction of the effect, the magnitude really is quite amazing. Let's move on to politics, where there has been loads going on over the last few weeks, most of which we've touched on in the news segment of the show in the past. So we had the autumn statement, of course, which we said was a quiet one, thankfully. So housing benefit has been unfrozen from next April, which is good news all round. The mortgage guarantee scheme has been extended until 2025, and there have been some minor planning reforms with permitted development for splitting a house into 2 flats and the ability to pay more to get your application heard faster. There's also the leasehold reform bill. We've got a video on this, which we'll link to in the show notes, which gives all the details. But there's a range of measures in there, including the standard lease extension going from 90 years to 990 years. Strangely, the most eye-catching measure that was in the original statement about this, which is that the selling of new leasehold houses would be banned, isn't in the bill as currently drafted. But it's being debated in Parliament for the first time next week, and apparently it's going to be added later in the process. All a bit weird, but doesn't particularly matter because despite all the noise about leasehold houses, practically none, in fact, are sold on a leasehold basis now anyway. Something that does matter though, Rob, is the ban on no-fault evictions. You will remember that when the Renters Reform Bill was last debated, the government put in this caveat about that element waiting until the court system had been reformed. So they still wanted to do it, but not until they sorted the courts out. Labour, though, has come out and said that they will be banning no-fault evictions on day one of them taking power, court reform or not. And let's be honest, the answer will be not. So the next general election, which is highly likely, almost certain to happen in 2024, is shaping up to be a very interesting one.
It is, and of course, through each month's market update, we will keep you updated on what all political parties are talking about leading up to the election, what that will mean for you as a property investor, and continue to bring you all the updates on rents, house prices, mortgages, and so much more. We'll be kicking back off with our market updates in January. As Rob said, it sounds like it's going to be a very interesting year.
Just before we finish, time for Hub Extra, the part of the show where we bring you a little bit more. And we know you like hearing about property, but we also know what you're really here for is an update on Rob B's health. And Rob, I believe you've been putting some numbers to your fitness regime this week.
Well, I have. And the reason why I'm bringing this as a Hub Extra is because I know a lot of people will be thinking about their goals over the coming weeks, ready for the next year. I've certainly been reflecting on what I want to achieve for over the next 12, 24 months. And if you really want to be successful with goal setting, having some numbers behind you to measure your success or progress in a certain area is really, really useful. So very recently, I went for a DEXA scan. That's D-E-X-A, a DEXA scan. And a DEXA scan does a lot of things, but it mainly looks at your body fat, and it looks at your body fat, your body composition, and it breaks down your overall body fat levels to an incredible rate of accuracy. And if you think your bathroom scales at home give you that number, they don't. Mine at home were off by several points compared to this much more accurate scan. So you may as well ignore wherever your bathroom scales are telling you. But this scan, very accurate. You lie down, you're scanned for a few minutes, and then after a little bit of time, your results are kicked out. And it gives you information like your visceral fat as well, which is the fat around your organs. So really interesting stuff. But once you've got that data, and I had some other health tests done as well, once you have that data, then you've got something to measure against. And once you've got something that you measure and focus on, you will often improve on that number. So my recommendation is a DEXA scan. But Rob, I'm not the only one who's had one done. In fact, I'm talking about it, but you beat me to it. You've actually had one done already. So if you found it useful, because I've only just had it done, but you've had it done a while ago now. So have you found benefit from doing it? I hope so, otherwise I'm going to have to scrap this whole segment.
Yeah, so like you said, it's great for goal setting. So I did mine as a baseline, and then I booked a follow-up for the first couple of months of next year, the idea being that I can track my progress. So I think it's something that gets more useful as time goes on. But getting a read into your visceral fat, like you said, and also your bone density, checking up on those is super useful because they're really important. Yet there's, of course, no way visually you can know how they are. So you can, of course, go down a giant rabbit hole with all this kind of stuff and go to some very extreme extremes. But just doing things like that to establish where you are now and give yourself some ability to track, I think that's super worthwhile.
And if you'd like to take it to the next level, once you've got your results, feed them into ChatGPT. That's what I did. You can then prompt it to give you recommendations based on the data. Just keep prompting it, asking more and more questions once you've put your information in there. And it's like having your own private health advisor. Super cool.
Oh, I knew you'd sneak AI in there somewhere. It was always going to happen. That is us done for this week. Thank you for joining us for our final market update of the year. But there is so much still to pack in for the Property Podcast in 2023, including next week, looking back at those predictions we made in January. Just how silly will we look? Join us and find out. Until then, have a great week and we'll see you soon. Bye-bye.
Bye-bye.